To quite a bit of fanfare, the Asian Investment and Infrastructure Bank, or at least the deal to set it up, was signed by 50 different countries yesterday. 2 of those happened to be African. So why exactly would 2 countries from the African continent decide to join a financial institution whose sole purpose is to serve countries in Asia? We'll be asking that question and getting you some answers tonight in Global Business Africa. Welcome to the program. Here's what's coming up. A confrontation looms in South Africa in talks between gold miners and the unions, which have rejected the latest wage hike offer. And traders in Tanzania are being hammered as the Tanzanian shilling falls against the dollar. Let's start in South Africa. The country's largest gold mining union has indicated that strikes might be likely, having dismissed a wage offer by gold mining companies. Now, the major firms involved in these talks, AngloGold Ashanti, Harmony Gold and Sibanye Gold, have offered gold miners a 5-year wage deal, and that includes wage hikes of up to 13% for entry-level workers. Now, neither AMCU nor NUM are having any of that. They're demanding hikes of at least 80% for the lowest paid workers. The National Union of Mine Workers says the latest offer and their demands are, quote, poles apart, and workers are being pushed towards a strike. Now, between the decline in gold prices and rising input costs, most South African mines are simply not profitable, and it is feared that these ongoing pay disputes will further damage operations and revenues. Negotiations, however, did continue earlier today. Egypt is one of 2 African nations, South Africa being the other one, that have joined the newly formed Asian Infrastructure Investment Bank. Now, 50 of the founding members of the new institution signed the Articles of Agreement on Monday. That document outlined their shares, how policies will be made, and essentially how the bank will be run on a day-to-day basis. Tonight, Yasser Hakim answers a question as to why Egypt joined the AIIB and what it aims to get from it.
Egypt has been eager to stamp its name as a founding member of the AIIB. Egypt is already a founding member of the World Bank and the IMF, but it hasn't been a favorable experience so far.
The
IMF and the World Bank usually interfere in the internal political affairs, especially of the poor and developing nations such as Latin America and Africa, and this causes problems between the leaders of these countries and the international institutions.
Egyptians feel the AIIB will learn from the mistakes of the IMF, mistakes that led to even the US closest allies to join the Chinese institution. China is Egypt's largest trade partner, and in 2015 it signed investment deals in Egypt, shooting its investments up from only $2 billion in 2014 to $10 billion. A giant leap, but experts say Egypt will have more to gain from joining the bank.
We will benefit from being part of the 5 fastest growing economies in the world. That's first. Second, we'll have access to investments and loans from the Chinese International Bank. These loans will fund infrastructure projects with long-term, low-interest payment facilities.
Being only one of 2 African states accepted in the bank, there are calls to make use of this unique position. Experts have a lot of hope that AIIB will be the catalyst for development, not just in the North African country, but the continent as a whole. Egypt might not cut off ties with the unpopular Bretton Woods institution, but with the AIIB, it has a vital and important ally in its plans for development. Yasser Hakim for CCTV, Cairo.
And Yasser Hakim joins us now live from the Egyptian capital with more data on this story. Yasser, now that Egypt's ambassador to China has essentially signed the Articles of Agreement, the deal still has to be ratified domestically. Now that Egypt doesn't have a parliament in place, exactly how will that be done?
Well, because there's no parliament, then all the powers, the executive and the judicial powers, are with the president. So he has the same powers of the assembly or of the parliament, and he can ratify the law or any law at this stage, which kind of it's not what should happen, because there must be a chamber for the assembly, but it kind of fastens and speeds up situations like this one, where Egypt can just ratify the law and it's put into effect right after he signs and stamps this document.
Indeed. Let's talk about this share of the founding cap or the startup capital. Egypt has a 0.7% share of the AIIB's initial capital of about $50 billion. So that means it has to find somewhere around $350 million to fund its share of that. When and how will that cash be raised?
Well, there are two options now. That's what I've been told by the bankers and experts, saying that we have the central bank that said it is willing to release the amount of money within the next 2 to 3 months in the next period of time. The foreign reserves are now in the safe mode, not the good mode, but the safe mode, just above the $20 billion. And there's another batch of Arab aid, Gulf Arab aid, that should be around $4 billion over the next 6 months. That was promised from before. This is not a new batch, but something that's promised from since the Sharm el-Sheikh Economic Summit. That will be added to the part of it will be put in the foreign reserves. So there is a chance, there is the money to raise from the foreign reserves. The other one is that inside the budget, the annual budget that is being studied and reviewed by the president at this point, the state budget, there is a clause that allows for the money to be put into the AIIB. But the bigger chance is that it will be taken from the central bank and from Egypt's foreign reserves.
Indeed. We'll leave it there for the time being. Thank you for your input. That's Yasser Hakim live from the Egyptian capital of Cairo. Let's still spend time in North Africa. Tunisia's government says the latest terrorist attack in the country could cost it over $500 million in tourism revenue. That's roughly a quarter of the money it makes from the sector every year from foreign visitors. Tourism Minister Salma Loumi says the attack, and I'm quoting her here, had a great impact on the economy. Already, thousands of tourists have fled. Adel Mahrouki is in Sousse. Here filed this report.
A country for a long time heavily dependent on tourism, but of late Tunisia has been struggling to attract foreign visitors spooked by the Arab uprisings. So Friday's attack here in Sousse is a huge blow. In recent days, almost half the tourists here have gone home.
The attack took place at the beginning of the touristic season, so we are expecting greater impact. But so far, the statistics showed that tourists decreased by more than half. We used to have 25,000 tourists daily. Now it's about 12 or 11,000. The numbers are still getting clearer.
Sousse used to host nearly 50,000 tourists daily. Now, in the wake of the massacre, life's looking bleak for those who depend on big spending visitors. 8 families make a living from this bazaar. The owner says they have barely sold anything since Friday.
The fault of someone. He has killed at least 500,000 poor people. Maybe 1 year later.
To what?
That people would perhaps come back for a while, but as you can see, nobody's here.
Can you survive that 1 more year?
Yeah, maybe 1 day, 2 days, 3 days. Then we start to borrow, to steal, to hate people, to take their money. Yeah, it's very sad, but this is the case of many people. I heard last night that few of some hotels are closing, and so many people will be fired away.
Tourism is the primary source of foreign currency for Tunisia. It's the second largest employer after agriculture. Over 10% of the labor force work in tourism. That's nearly 400,000 people. The years that followed the revolution, tourism was quite stagnant. In its peak year, 6 million tourists came to visit Tunisia. The Sousse attack came to interrupt a government plan to increase that rate to 10 million, making this plan much harder to achieve. Adel Mahroui, CCTV, Sousse, Tunisia.
On to Zambia now. The country started paying value-added tax refunds to mining companies, even as it aims to put an end to a long-running tax policy dispute. For several months now, mining companies have pointed out that they are owed over $600 million in VAT refunds. In February this year, the government decided to relax the rule requiring exporters to produce import-export documents in order to be able to claim the refunds. Foreign companies operating mines in the world's second largest copper producer include Glencore, First Quantum Barrick Gold and Vedanta. Now, some of these companies have confirmed that the government has indeed started making those payments. On to East Africa now. Currencies in the region have taken an absolute beating so far in 2015 as the dollar just keeps getting stronger and stronger. In Tanzania's case, the dollar has gained over 15% against the local currency in the last 6 months, placing the Tanzanian shilling at 30-year lows. Now that makes it one of Africa's worst performing currencies. And as the price of goods and services rise, businesses over there are struggling.
These traders at a central market in the commercial capital of Dar es Salaam are finding business increasingly tougher. Many of these sellers import their products, and with the Tanzanian shilling losing more than 15% of its value against the US dollar in the last 3 months, goods are getting more expensive to buy.
When the dollar comes high, it affects us because we should have to buy this clothes out of the country in India, and we pay in dollar.
Inflows of foreign exchange from agriculture exports and tourism have been modest, with the country now in the low season for international visitors. Both are major sources of hard currency for the East African nation. The shilling's decline has also made it hard for the service industry. Businesses like a Kemi revolving restaurant import wines and food, and the fluctuating currency is making budgeting more difficult. They are even now considering removing the shilling from menus and charging in dollars instead. The increased business costs are being passed on to customers, which is leading to a downturn in trade, further impacting the local economy.
Our rent is paid in US dollars, so we're having to make a lot more shillings to obviously pay for our rent. And a lot of our other overheads too. Our salaries, our expat salaries are all paid in US dollars. So we're just having to, we're having to make a lot more shilling.
Analysts say the decline in Tanzania's shilling is also due to a fall in gold exports and a rise in the price of oil imports.
Well, gold exports have been dropping for the last year. They've dropped by 1/3, and gold is the largest export in Tanzania by far. And in the past, oil prices have been declining, and so this masked the drop in the exports because oil is Tanzania's largest import. So they canceled. But now oil prices have been increasing, and they've increased by about 25% since April. And so this is now really hitting the currency, and the piper must be paid.
While there are signs the shilling may stabilise in the future, many traders and customers say it's already cost them a huge amount this year. Andrew Thompson, CCTV.
Let's make a quick run through currency markets here for you. With regard to new listings over in Egypt, you'll recall, of course, the bourse had quite a bit of turmoil over the last couple of years. Imam Misra will be listing on the 5th of July. The initial figure, of course, was the 2nd of July, which should be the day after tomorrow, but it's been pushed forward. It did put up about 13% of its shares in its IPO around June, and of course, there was quite a bit of oversubscription for that on the retail side by 36 times and the institutional side by about 10 times. Let's see how the shares perform once they're listed on the 5th of July. After the worst Ebola outbreak on record, how exactly will 3 economies in West Africa get back on track? We'll be answering that question shortly. We'll also be looking at the end of an era as Rio Tinto sells off its mining interests in Zimbabwe. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global Business, weekdays at this time on CCTV Africa.
A
effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But El-Sisi told government he wants to control the prices promptly before people's patience runs out.
Welcome back to the program. You're still watching Global Business Africa from the Kenyan capital, Nairobi. Now, over in West Africa, a Liberian national has died of Ebola, the first recorded case since the country was declared Ebola-free on the 9th of May. According to the Liberian Deputy Health Minister, Tolbert Nyenswa, the corpse of a 17-year-old tested positive for Ebola in Margibi County. The minister has urged people not to panic, saying the corpse has been buried and that health officials have started tracing people the victim may have come into contact with. Liberia was right at the heart of the recent Ebola epidemic, which killed over 11,000 people. Now, as the Ebola outbreak in West Africa wanes, nations devastated by this epidemic are pushing for a long-term response centered on economic recovery. The Liberian President, Ellen Johnson Sirleaf, is on record calling for an Ebola Marshall Plan of sorts to help rebuild the region's fragile economies. This outbreak has undermined the three countries' already fragile economies. Remember, we're talking about Liberia, Sierra Leone and Guinea here, and all of the damage has been exacerbated by many of the pre-existing challenges. With a combined GDP of about $13.9 billion in 2013, these three nations have long suffered from a lack of infrastructure, proper healthcare and economic development. Let's get some details on this particular topic. Sharif Al-Tunyi is a commentator on economic matters, is live in Cairo with us tonight. Liberia needs roughly $800 million to finance the recovery plan that it's put forward and shared with bodies like the World Bank. Do we have any idea how much Sierra Leone and Guinea need to repair the damage caused by the worst Ebola outbreak on record?
Yes, good evening, Ramah. Definitely looking at Liberia, it has, like you mentioned, $812 million. But looking at other nations like Sierra Leone would be having the same number. But looking at Guinea, we're speaking about $860 million with a total of 2.9 over the next 3 years. We're speaking 2015, 2016, 2017. But these numbers are short of recovering, the huge disruption and the socio-economic impact that has affected those nations. Looking at, like you mentioned, 13 GDP billion, but again, they are going to be affected by 2.2 billion in the GDP. Liberia alone will be affected by $240 million in its GDP. So in that front, looking at the impact on Liberia in specific, you find that they have revised their GDP from 5.9% of GDP towards 1%, which is very low. Look at Sierra Leone, they have revised, if we remember in 2013, they had a trajectory growth of to 20%. Now it is shrinking, the GDP is shrinking 23.5%, which is a massive slump. Guinea, we're speaking about minus 0.2 versus a revise of 4.3% of GDP. This is a massive economic impact. Liberia alone had 5 million children affected by, deprived from schools and classes in education. We're speaking also on psychological aspects. We're speaking on impact on the traditions and customs of Liberian, this intimate ways of greeting and saying hello and saying goodbye and the finger tap. Even this is affected due to the fear from the Ebola disease. But not only that, you get other nations affected in education, you get them affected in the agriculture production. Guinea is affected in tourism. Sierra Leone is affected in the deficit, more than double the deficit. We're speaking also on an exchange rate effect of 15% also. So this is massive on wide scale.
Indeed. It's one thing, however, to get the cash needed to finance these recovery plans, something in the order of about $2 billion or more. But how can these three countries overcome the perception problem that still plagues them?
Yes, there's no immediate resolution for this. If we remember, this outbreak has started in 1976, and the lessons learned from them from that time was not really enough. We're speaking today on a specific project that should be done in the recovery plans. All of these nations and the countries have the economic stabilization recovery plans, which is focused on the healthcare. We're speaking on the frontline care. We're speaking on agriculture, education, even infrastructure projects like sanitation and water and electricity. All of these are very important and crucial. But if we're speaking about, resolutions for the long term, we're speaking also on aspects like easing the restrictions for quarantine of the disease. This is also affecting economy. It has to be done in an intelligent and smart way to avoid the derail of the economic development and growth in that front. We're also speaking about members of parliament, and instead of political fights over there, looking at the gaps in governance and supporting this. We're speaking about also an overall strategic growth and inclusive strategy plan for those nations, rather than looking at how to fight these diseases only. We're speaking about a lot of things that would make up to this economy.
Indeed. We'll leave it there for the time being. Thank you for your input. We've been speaking there to Sherif El-Touni live in Cairo, a commentator on economic and political matters, live, of course, in the Egyptian capital. Now, after more than 60 years of doing business in the country, Rio Tinto, for lack of a better word, is divorcing Zimbabwe. And like several other divorces that you might refer to, money was right at the heart of this breakup. The company's exit effectively ends its interest in Zimbabwe's diamond and coal mining sector, as Farai Makutuya reports.
Rio Tinto has sold its 78% stake in Moroa Diamond Mine and a 50% shareholding in Sengwa Coal Mine to an entity controlled by Rio Zim. Rio Zim is a former local subsidiary of Rio Tinto. It's listed on the Zimbabwe Stock Exchange and held the balance of equity in both the diamond and coal mining operations. Details of how much cash exchanged hands in this deal are yet to be divulged. The departure of a global mining giant could dent the country's investment drive.
Just the presence of that brand in your country is good enough, because when investors are coming to make investments in other mining ventures, these are the guys that they will go to and say, what do you think about Zimbabwe? What do you think? Is it okay for us to come in and invest in Zimbabwe? These are the go-to guys. So when they are leaving, then it sends out a message that something is wrong.
Rio Tinto had previously cited royalties and land taxes imposed under the country's indigenization laws as weighing down its operations. The company had also raised concerns over plans by government to consolidate all diamond mining operations in the country into one vehicle in which the state will have a 50% shareholding. Rio's Moroa mine is the most profitable diamond operation in the country, producing about 300,000 carats per annum. Its Sengwa coal field, believed to hold deposits of more than 1 billion tons, is the planned location of a 2,000 megawatt thermal power station. Farai Makutuya, CCTV, Harare, Zimbabwe.
Now then, a quick run through commodity prices here for you. Oil, of course, still languishing in the low 60s, but that's not our area of interest today. Data coming out of the IMF today. It's a $918 million bailout of Ghana and the program that resulted on that. The fund says that it is essentially on track and the government has met almost all the performance criteria. In fact, it actually argues that Ghana's 2015 GDP growth was about 3.5%, and the West African country is actually on course to exceed its 2015 deficit reduction target so far. Some interesting numbers coming out from there. Coming up next, we'll introduce you to an entrepreneur in South Africa who turned her love for needlework into an enterprise. Welcome back to the program. Now, according to the latest government statistics, the unemployment rate in South Africa is around 30%. And many South Africans, both young and old, have essentially just given up looking for work. They're now setting out to establish ventures with meager resources in order to earn a living. Renée Delcam met up with one of them in Cape Town.
Bridget Dawson is in her early 50s and is one out of every 3 South Africans who's unemployed. But after trying to find work, Without success, she decided to stop pounding the pavements and create an income to support herself and her family.
I've been looking for a job since last year, and it's been very difficult, mainly because of my age. I'm 53 years old, so there's not many employers that would offer a job to a person of my age group, and therefore I've been struggling, to get work, but unfortunately I haven't been successful yet. And because of my circumstances, I decided to try something new and do something for myself.
A few months ago, the single mother of two decided to borrow her sister's sewing machine and opted to fall back on her love for needlework when she was younger to help put food on the table. She started making these table runners and placemats, which are now growing increasingly popular. Bridget sells her work in and around Cape Town, mostly through word of mouth, but plans to start promoting her craft on social media as well. She buys different types of fabric according to her customers' orders, but is heavily inspired by indigenous South African flora and African wildlife.
I am an earthly person and I love nature. I'm drawn to that, and therefore I've made quite a few runners with the protea and the big five animals of South Africa, and that has been doing well. A lot of people have been asking or requesting me to make sets.
Bridget Dawson refers to her small enterprise as a mini business, but she's hoping to expand her business and become an entrepreneur who can create jobs and help other South Africans put food on their tables as well.
I would like to have women working for me that I know that will be able to provide for their families. And by doing that, we'll make their lives also better, because we all need to help each other. It's very tough out there, and it's not easy getting a job.
Renee Delcam, CCTV, Cape Town, South Africa.
All right, then the Kenyan shilling misbehaving, if you will, on the currency market today, ending the day above 99 shillings to the dollar in trading. Inflation data coming out as well, 7.03 for the month of June. GDP data for the first quarter comes out later on tomorrow. We'll have a full breakdown of the data and what exactly it means for every different sector of the economy tomorrow. But that's it for this edition of Global Business. As always, we value your feedback. globalbusinessafrica@cctv.com is the email address to use. The news continues 24/7 on Twitter and on Facebook. We'll see you over there. Thank you for watching. I'm Ramah Nyang.